Did you believe the Federal Reserve when they said inflation would be transitory? Well, apparently a lot of people did. In today's video, I'm going to show you how the Federal Reserve is now suggesting that you must accept a higher level of inflation. Yes, that's right. I know. You've been dealing with inflation in the past few years more than ever before. Prices are rising on just about everything. And yet the Federal Reserve is now preparing you to get into the mode where you're going to have to accept this higher for longer. In fact, I found this report to be so interesting, I wanted to bring it up in front for you right here. It comes from the Cleveland Fed website directly. Inflation dynamics, higher for longer. Let me stop there just to tell you that we've been talking about this from 2020. Inflation transitory nonsense. How many people out there, analysts and so on, were all marching for that? Inflation is transitory, we're team transitory. And so many stocks were rising based on the expectation that that was accurate. And then later, that was found out to definitely not be the case. We're hearing that again, that inflation is just going to keep going down and down and down and down, and there's nothing to worry about. But of course, the Federal Reserve themselves has started to suggest that you will accept a higher level of inflation due to many factors. This means that they are going to allow that 2% target that I talked about in yesterday's video, 2% target to slide upward. Maybe it's not going to be 2%. Maybe we're going to make it 2.75%. Let's read on. Here we are. And by the way, my goodness, I can't believe this is actually happening. Like literally yesterday, I had yet another video talking about that, and it lines up perfectly to this one. So it's talking about their measurements of inflation. They love that, the core PCE and so on. But there's just a point, I love to give you the summary. One model projects that the conditional on the SEP unemployment rate path. SEP is a summary of economic projections. It's the Federal Reserve and where they believe in, their levels of inflation will be at certain points in time. That's all that means, okay? The unemployment rate path and the rapid deceleration of core goods prices, core PCE inflation moderates to only 2.75% by the end of 2025. Inflation will be higher for longer. A deep recession would be necessary to achieve the SEP's projected inflation path. A simple reduced form welfare analysis, which abstracts from any danger of inflation expectations becoming unanchored, suggests that a recession would not be optimal. So what are the takeaways here from this? Number one, this is coming directly from the Federal Reserve themselves. They are talking about a rate of 2.75% by the end of 2025, and also saying that you will accept a higher level for longer. That's what you need to know from this. And I have talked about it for a while, saying that of course this has to be the case, of course. And when these things are happening, what does that mean? Oh, well, who cares? It's another number. No, this is going to have a material impact. I'll bring you that right here today. All takeaways, takeaway after takeaway, all right? Let me show you. This is Nick Timmerose, and you might know him if you've been watching this channel for a while, works for the Wall Street Journal. Some refer to him as the Fed Whisperer because he likes to bring out information that is most likely handed to him behind the scenes. Because it comes through him, the market then reacts and talks about it, analysts discuss it, and then you can get a little bit of a reaction from the market, and the Federal Reserve can do what they need to as a result of that. It's their way of being able to test the markets before they're going to say or do something. Okay, so Nikki Leaks basically said this. The researchers concluded that if 2.8% inflation doesn't result in an unanchoring of inflation expectations, the December FOMC projection, in which inflation stays somewhat above the 2% target for longer, would be the optimal policy. So here they are. This is what's going on right now, today. Okay? You're looking at this, saying that this is the optimal policy to allow higher for longer inflation. It's coming right here from Nikki Leaks. And I think that's important because this means businesses, corporations, small businesses, individuals will all feel the impact of that higher inflation. It's not coming down. They don't expect it to come down. And so we should be ready for that. This is a big article basically talking about stocks and so on, but this is the one point I wanted to make from it. There will either be a recession soon, in which case earnings come down faster, or we get a strong economy in the near term requiring a more aggressive Fed, a more aggressive derating, and a bigger recession later. To buy equities here is to be dispensing with reality in favor of a fairy story or fairy tale, right? Think about that. The Federal Reserve is in the middle of a tightening cycle. Are they going to necessarily just start cutting from this point here? Well, the market's pricing that in. The market is literally pricing in cuts this year. That really doesn't fit into any narrative. So if the market doesn't get that, well, then we have a big problem. And now we've seen over the past little while where the markets have been looking weak as a result. You might be able to see that behind me, but that is basically the stock market, the S&P 500, and where we've gone, following perfectly according to the several indicators I got running up there. But anyway, the point is that when you look at it, it just shows us that you can't avoid where we have the money mirror method, which is when the governments are pumping out the cash, markets can go up. But when they take it away, markets go down. I mean, it's a simple matter of fact, right? Office landlord defaults are escalating as lenders brace for more distress. The delinquency rate for office loans that back commercial mortgage-backed securities remains low, but it's heading higher. This is important. Commercial real estate is very, very vulnerable to everything that's been happening so far. We know that. That is very, very true because they don't need this anymore. They don't need all the real estate. We know that, but just showing you the data that defaults are in fact escalating. Let's take a look at the next aspect. Where we have this, I don't know if I'm pronouncing it right, but ASDA rations sales of fruit and vegetables after widespread shortages. Are you kidding me? What the heck is going on here? Where the supermarkets have to basically say, no, we can't do that and this. Are we back in 2020 mode again? No, you can only have one roll of toilet paper. I mean, what's going on here? This is crazy. Walmart warns that shoppers are feeling the squeeze of higher prices. You know you've got a problem when the discount retailers, such as Walmart, are saying this. Because during these times, we would have Walmart, dollar stores, Costco, they would do well because the shoppers still have to buy, they still have to eat, they still have to buy different things, but they would choose a cheaper store over the more expensive one. But now even Walmart is saying that. These are pieces of evidence, anecdotal evidence, that everybody should be stacking up to see what's actually happening in the economy. All related to what I talked about initially, and that is inflation, and that is central bank policies. And then I wanted to show you this because it is a concern. We're seeing all kinds of wild things. This happens to be one. Power grid attacks surge and are likely to continue. Confidential analysis shows a sharp rise in targeting of facilities with gunfire, intrusion, and vandalism. What we have right now on so many different levels is a big concern. Just looking at it, when people are in these levels of dire straits, when they just can't make ends meet, we do see the concerns. And that happens, could happen anywhere. You're watching people, I think I covered it here, at least on my Twitter. I posted the fact that in LA, they're saying we want to make sure that people don't leave empty water bottles or cans, or just, not even empty, because they will break in. The police were saying they will break into the car because they're going to take that so they can recycle it. So you're going to get that 5 or 10 cents. Somebody will break your car for 5 or 10 cents. And they're just saying that, yep, that's just the way it goes. So we can see the prosperity is completely disappearing. There are two levels. There's the haves and the have-nots. There's the rich, there's the poor. Okay, and what are they going to do? There's going to be that small group. Not the guy down the street who has the BMW. We're talking about a very small group of people that are the haves, and then there's everybody else. And so you see these pieces of information coming in here power grid attacks happen to be just one of those. It could be something coming out from, some foreign entity and so on. That is also a possibility. But I'm just showing you that as a general increase in crime. Increase the prosperity, the crime goes down. But we don't see that. Not at all. And that's just the way it goes. Here we are today, right now. Inflation is going up. The Federal Reserve telling you you're going to have to accept a higher level of inflation. Too bad. It's just the way it goes. We are not going to increase interest rates to a level that would actually stamp down that inflation. And we want to keep the market red hot as much as possible. Don't want to scare the markets too much. I mean, this is wild what we're seeing. Never seen anything like this before in history. I am a student of history. I study it regularly. I've read countless books, and what we're seeing now, just never heard of. So keep your assets in check right now. Watch out what's happening. Take a look at what you have. Trim your winnings. If you're confident in that, just say, okay, I made good money. I'm happy. I'm going to sell that off. Simple things like a treasury, 6-month treasury is going to get you 5%. This is wild. We've never seen these type of things before. And yet here we are today. Well, just unbelievable on the whole. Look, did you find this video informative? You got to hit that subscribe button down below, because each and every day I bring the latest and greatest information. And don't forget to share these videos with your friends and family. I'll see you tomorrow. Take care.